Hey everyone, it's Ed Zoller, Villa Realty Group, with your end of June real estate market update for Lee County, Florida. I have been a real estate agent for over 22 years, full time, through the thick and thin, in the battlefield, and I've been putting these market updates out now for a long, long time. And I feel like the data can tell you a lot about what the market's doing, and so you can make a good, educated decision. But you need the facts, you need to analyze the data, and someone like myself to do this summary video. This is you're going to be able to find this PowerPoint on Lee County Market Update. I'm not going to read it to you. It will be about over a half an hour if you read it yourself. But this is a highlight video. It's just going to go over the graph. So let's jump to it. This is the inventory for us right now. And as you can see, hey, we went down. This is the first positive sign I've seen of our inventory going down, that we could be stabilizing maybe sometime soon. But the big problem is, if you look at the historic data going back to 2016, it goes down until September, and in September up, September up, September up, September up. Forget about COVID. Kind of messed the whole thing up. That's why we had this inventory crisis. We had nothing to sell, and we have now exploded 1,000% in inventory. So just remember this. We should see down, down, down until September. So this needs to go down, but really, if you look at it, it's just a rounded top. It went up in a month it should have gone down, and then it's gone down enough to go back to what it was in January. So we kind of skipped all these months. And so in whatever this goes down to, maybe it goes down to 8,000. But if you look at the increase from 8,000 to 11,000, from 7,000 to 10,000, from 7 to 10, it goes up another 3,000 inventory. If this only goes to 8, we're going to shoot up to 11 and maybe even have a all-time high of inventory come September all the way up until January. These are important months for you buyers out there, because September is going to be the start of the inventory surge, as it has every single year. And the more things on the shelf, the bigger discounts you're going to see. I do track sales inventory growth in the state, and it's kind of funny. Hey, welcome Vero Beach, Sebastian, Florida, making the top 10. They're the new person right now. Gainesville has also joined our top 5, kind of kicking us from the 5 spot. But only about a couple months ago, North Punta Gorda was number 1, always has been. Northport was number 2. We were number 3 for months and months and months. And then all of a sudden now, Punta Gorda is still leading that race. Tampa joined in last month. They're now number 2 as far as inventory growth. And there's a lot of people in Tampa. So this is a lot of inventory that's kind of increasing. And when you have increased inventory, that means there's a lack of demand, and it's potentially overvalued. Cape Coral, you can see Fort Myers, Cape Coral. It just says Cape Coral on there. Negative home value growth, negative home value growth, negative home value growth. But look at Gainesville. They're still growing. And this is what you have to realize when you analyze a market throughout the state, is when a market's going up, there's always a leader of the pack, and everyone else follows behind. And when you're turning like this, and inventory's going up, and price cuts are going up, and the market's going down, there is a leader, and then there's ones that join later. So it's not surprising to see that their home value growth year over year is an increase still, but we were an increase at one point too. And now we're in the negatives. And so is Northport, and so is Punta Gorda, and Sebastian's looking like it's getting really close, and Palm Bay, Florida's getting close. But Orlando, Gainesville, and Tampa are still showing last year to this year a growth. But what do you think is going to be in the next months, or 6, 7 months or so? You're going to start seeing negatives on that, because you cannot have that kind of inventory growth with these overvalued rates and this value to income ratio. You want to see something in the 3s. And I don't know how Mississippi made this thing. My map, I must not have made it small enough. And having soaring over 22% price cuts, those aren't positive things for a market that's appreciating. It's going to be depreciating. Our demand. So I kind of highlighted in this graph, and I told you this last month, that demand bottoms in January and starts increasing. This is when the buyers come back in, because, hey, we have all this inventory now that's been growing since September. Inventory grows from September to January, and January is when it has peaked out here and here and here and here, and every single time it has gone up. Now you can see the peaks are slowly going down. Our long-term average is 1,860 things selling in a month, and we didn't even hit our peak this year. We should have been over. This is an average. So what do you think the average is going to do? It's going to start coming down here. But we did go down our demand, as I would expect us to, until we hit January when it goes back up. So again, taking this data, you can kind of say as a buyer, hey, my time's going to be September to January. Right in that, we're probably going to get the best deals, see the biggest price cuts, and have the most inventory to choose from. More inventory, more sellers, more competition, price goes down. Remember that. Our average home price was a goose egg. I mean, it didn't budge. It just sat there. It's a flat line, and it needed to go down. Actually, for a positive thing for the market, you want to see it go down. We are not affordable at this price. There's nothing to indicate we're gonna be affordable at that price. You know, last time we went above this average line here, we crashed well below it. Equal and opposite reaction. And then once we stabilize, this is what I want to see. I want to see as income goes up and people are making more money, that they stay within that realm. But COVID happened, we exploded. So all of this is that fake equity I talked about. Sellers out there, you still have it. We're still way too elevated in price. And so you still have that fake, quote, fake equity. But for buyers out there, you want to see this go away, or play a trick that I'm going to teach you a little bit later on how you can make that go away right now. But for right now, our average price, big goose egg, didn't go down. Kind of wanted to see it go down because that will be a sign toward stabilization and affordability. And here comes the affordability chart. Actually, it did go down slightly, and that's because the interest rates went from 7.18 to 7.01. That was good. And our income went up. So it should have gone down a little bit more. But our prices still need to come so that this affordability graph gets back into the 20s. Last time we were 40s, we crashed to the teens, and then obviously this was an overcorrection. We went back to the 20s, and there we stayed from 2014 all the way to 2020. And then when they lowered the rate again from 2020 to 2021, everything was more affordable. Then we had our huge price boom, unfounded. There was no fundamentals behind it, and affordability shot right back to 40% again, steeply, very quickly. And now this year, this is January, we're starting to go down. Now it's actually getting more and more and more unaffordable. And then this is the first month it's showing a little downtick down. I take a look at this because this will tell you if the market gets stable. I did this from last month. I'd like to put it in there for those of you who didn't see last month's, but everyone talks about how people are coming to Florida. People are moving here, and they're coming from New York and coming from California. They're not, because as you see here, this steep decrease of population surge. This is from last year. I can't wait to see where this goes. I kind of thinking it might even shoot past zero. I think we're going to be losing people in Florida for 2024. Won't know those stats until January of next year. But I do want to show you something. I talk about areas and pockets of stability. You know, and it looks like very normally in the 90s, we were gaining between 1.5% and 2% of our population. That is the normal. And during the time when Florida became very affordable, we started hitting into the 3s. And then we went to the 4s and 5s, and it did not last very long. This was when you made everyone a buyer back during those garbage loan years, and everyone flooded to Florida, which shows you Florida is a good destination spot. But then, of course, we corrected back into the 2s and 3s, that stable zone pocket, which is right about here. And of course, then we crashed and we went to the negatives, lost people during our building crisis and the big foreclosure crashes. And then we kind of stabilized and went right back to that 2-3% or so. We started losing people when the interest rates started going up in 2018 a little bit. Then it popped back to 2 once interest rates went back down. Then we gained a bunch of people during COVID because, hey, we weren't shut down. And that was the articles you heard on the news. So what happened? They all left. We stopped gaining net migration. We're still in the 1s. I guess we could say we're as good as we were back from 1998. I think we have a lot more going on right now, commercial-wise and industry-wise and everything else. But I do think this is a steep decrease down. So I just like to put that in there for those of you who missed it last month. And then this is the graph, and it's hard to tell you what's going on. This is what's called the Zillow Home Value Index graph. I do use this only for one thing. The number doesn't matter. How far from center line does matter. So as you see steady increase month over month of home value, and it peaks out, and then obviously during our crash we were losing up to 2% a month, or as much as 2.69% a month, got back to stable. I count these months. This was 59 months to stable. 2012, it showed you what year we stabilized. Then we were just kind of gaining month by month, not quite a percent, year over year over year over year, and then COVID happened and we boomed again, and then we had a second boom, like a double hit. And then once we dropped below that center line, I want to count the consecutive months. This was 11 months. Now this is 11 consecutive months. This one was 59 consecutive months, and it's getting further away. That is not great news for the future of what we're expecting our market to do. I want to see this hit center line, and then I can start seeing data and evidence that shows that we're stabilized. We will stabilize before we go up. So don't have fear of missing out that things are going to go up. This isn't the stock market. It's not going to just go up all of a sudden next month. It's going to stabilize first, build foundation, and then it might shoot the moon, or then it might go up. But this is a good graph that I use more to see consecutive months. We're at 11. When I first started doing these, we were at 2. Now we're at 11. Maybe we'll be at 21 by the end of the next year. What we take a look at this to see if it's getting further away or closer. So let's just go over stats. June 1st, our housings for sale went down. That's a good thing, but our demand went down too, so that kind of offset that. Our pending sales is something that's important to look at. They went down 7%. When you look at last month's pending sales, that became this month's sales. That's how that works. This just went under contract, and then it closes the next month. And you can always see that pendings are always higher because deals do fall apart. We have a lot of back on the markets that you'll see because buyers' financing fell through or didn't appraise or failed inspection or something. So when you see a drop in pending sales, then you can expect that next month this will be lower than this number, since this is lower than this. So that's kind of a future crystal ball thing. New constructions went down. They sold 30 more than they put on, but don't let that get to your head like, oh, that's better. 1,890 homes. We still have like 11,000 open permits right now in Lee County of houses being built. If you're driving Lee County, you know it, you see it, you see houses being built all the time. So right now, it is a good sign that they went down. Our houses are sitting on the market, did uptake to that 68 days now. Remember, like a year and a half ago, it was 30 days. Now it's 68 days, more than doubling. Our median asking price, now this is just an asking price, it doesn't mean it's sold, went up slightly, but our selling price stayed exactly like I told you before, goose egg, did not budge at all, which did cause this number to go up, the percent of asking price sold. But what you can take out of this is some positive indicators, but it's just also a normal thing that we see during our season. Our price cuts did go down. When we were up to 37%, we were the number one in the state. And then you kind of can see right here, we aren't even in the top 10. It's like I said before, like watching a horse race. We were number 3. Actually, at one point we were number 1. And now Tampa, Jacksonville, Deltona, Palm Bay, Northport was always up there with us. Panama City, Punta Gorda, Port St. Lucie, Pensacola, Lakeland, then us. And then everybody else after us had this. You can see some new names on this thing, but price cuts usually goes along with more inventory growth, and you start putting all these things together. There's more houses for sale. The people can't sell them. They're sitting on the market longer. They price cut to move it. Then that causes the next guy to price cut, and then more people come on and they start price cutting, and you can see where the dominoes lie here. But at least we're not in the top 10 anymore, so positive news there. We're, of course, still in a severe buyer's market. We were in a buyer's market for a long, long time. For 3 years, we were in extreme seller's market, and now we're in extreme buyer's market. Let's just say 2026. Let's just say this is going to be a normal, predictable, wavy graph like this. That's how I kind of use this. But obviously, someone asked me we're in a buyer's market. Of course we are. For those of you who missed last month, this is a graph from 1963. This shows national builder inventory year by year. And what I like to look at is this red line. When builders have had 9 months of inventory standing, which is not what they want, we have had that happen 5 times in our country's history since 1963. And what's funny about these years, They're named. You can Google the 1973 stagflation recession and find out all about it. And then this, and the 1990 recession, and the Great Recession, and the COVID-19 recession. And what are we going to call this? This did uptick. It was like 9.1 months, and now it's 9.3 months. Doesn't look like it's that much over that, but builders are gaining nationwide more inventory of homes, and we don't know what we're going to call this. 2 years from now, we'll probably have a Googleable thing about the time that we're experiencing right now, just not named yet. And what do all of these have in common? Well, the Feds were tightening monetary policy. The Feds were rising the interest rates to combat inflation. Sound familiar? It's exactly what's going on right now. So this is what's going on right now in our economy. And so is it a great time to buy a home? I want you to just understand, when you look at data like this, should you have fear that it's going to go up? And I say all of this pinpoints to no. Maybe in January, when the demand goes up, it might stabilize, because right now it's losing. So it has to stabilize before it goes up. Anyway, so June's big news. All right, PCE. This just came out the end of this month, or June. Feds released the PCE numbers. This is what's called the Personal Consumption Expenditures Index number. And it's a measure of what the Feds use to see, is it working? Is what we're doing and making the country suffer, is it working towards combating inflation? And the answer this month was it did. So they use this as an indicator. They're trying to get to 2%, and it's just not happening. But see this increase, anytime you see increase, inflation's getting worse and worse and worse. Then it drops. It got worse this month. They were not going to do Fed cut rates, and they're talking about cutting 0.1%, but not until they get to 2. So it's working. This is positive news, but doesn't mean a price cut's going to happen this month. It's not going to happen until it gets back to 2%. So they got to make us suffer more, so we quit spending money so that we can hunker down. So if we stop spending money, then we can get inflation back in control. Like it's our fault that it even went up in the first place, but other topic on that. 0.1% drop by a buyer to a buyer, as far as affordability goes, saves them $24 a month. But a second piece of news came out for Florida this month. Citizens Insurance. That is our state-backed insurance company. If you have a used home and you're not new or within 3 years old, then most insurance companies don't want you. You have to have a new roof and a new this and a new that because they don't want to cover you. You can always get Citizens Insurance. They just said that they're going to increase for 2025 a 14% increase of insurance. I just want to highlight a couple things. I don't want to read to you this whole thing, but at the end of the day, that is going to increase monthly payments, which is going to make it less affordable or more unaffordable, and that is going to cause prices to come down when this happens. So a home payment is principal, interest, taxes, and insurance. So I actually have a couple little ideas here, and I'm just going to briefly go over this. I took an average home with an average interest rate, and average taxes, and average insurance that I'm seeing for a used home, and this is the monthly payment of what that home is. Whether it's affordable or not, that's what it is. An increase of 14% makes the payment $24 more. To offset this, we'd have to drop the price $3,000 or drop the interest rate 1/8 of a point. So thanks, Feds. If you do drop it, the insurance is going to chew that all up and then some and not change anything. The outcome's going to be the same. Not to mention that, but people don't realize that we're taxed in arrears in Florida, which means that the value of last year is what you're taxed on this year. Every state is different. New York, they tax forward. We're taxed backwards. So in November, expect your taxes to increase 3% for owner-occupied homesteaded homes and 10% for the rest of you. So let's just see what that does. If you have an unhomesteaded home, let's say it's an investor home and you're renting it, your taxes are going to go up 10% because it definitely went up 10% last year from the year before. That's going to cause your monthly payment to go up a lot, which means you'd have to drop the price $5,000. So between insurance and taxes on that mortgage payment, that's going to be a guaranteed $8,000 drop in price without the market even stabilizing. That's something to consider. So what does this mean? It means we're unaffordable, guys. I'd expect prices to come down anyway. They have to come down a lot in order for people to make this affordable. But there is a way for you buyers out there. I have sold homes this year. I just sold 2 this last month, 2 before that. I usually average 7. Obviously, it's really slow. I'm not really telling people to buy homes right now. But if we're going to get a home, it's got to make sense for them. And not just that they can afford it. It's got to make sense. Let me show you a house. This is a house in Cape Coral. Oh, it's actually North Fort Myers. It's in a community. It's brand new, 4 bedrooms. It's got quartz countertops and stainless appliances and walk-in. It's a 4 bedroom home and it's on the water, right? I want you to take a look at what's written right here. So let's pretend this is not a new home with these incentives. This would cost you $362,999. Your down payment would be $12,000. Your closing costs would be $7,800. You're going to come to closing with 20 grand on an FHA loan. There's your insurance. There's your interest rate right now. As of when I'm writing this, your payments $3,012, including the $128 HOA that pays for the new clubhouse, new pool, bocce, and tennis courts and pickleball and all that good stuff. Okay, that's what it comes down to. You cough up 20 grand, 3 grand a month. But let's look at this. We take this price. They're offering a 5.5% already buy down from 6.75 to that. And 21 grand in flex cash. What the heck is that? I talked about this last month. So now your down payment, it makes your down payment go from 20 grand down to just the 12,704, which is 3.5% down that you're giving to the bank. The seller is paying the closing costs, which we're not using all of the 21 grand. So the total down is now 12. You just saved yourself 8,000 out of pocket. The insurance, because it's new, is like 30% less. It's 900, actually 50% less because it's brand new. Insurance companies love brand new homes because you're under warranty. You're not going to make a claim. Just got quotes of this particular house at $900 a month. But we use some of this 21 grand to buy 5.5 down. Interest rate 4.99 as we used a lot of that flex cash to do that. So you just put down 12 grand and your payment's $24.63. You just saved yourself $549 a month. Now, a lot of you would sit there and say, Ed, why wouldn't you just wait till the prices dropped, as it looks like the prices are dropping? Because they'd have to drop $75,000. They'd have to drop 20%. If this house used was $287, that payment would be $24.63, including that HOA. But we're getting it at this price. We're getting the same month, like if it dropped to that. This price for this house used would be the same monthly payment as this. Let that absorb in for a second. What's that going to do for downward pressure for the used market? Let's say you bought this 3 years ago and you went to sell it. Well, you can't compete when they're offering this. This is how powerful. This is why prices are maintaining their levels, because builders have to give 21 grand, another 5 grand, another 15,000, another 30,000. I just had one of those houses I talked about last month. The appraisal came in 7 grand short. They ate it. That's another 7 grand on top of the 60,000 worth of incentives. So we actually like it now when appraisals don't come in. Obviously, the builders aren't going to like it. Sellers aren't going to like it. But it's going to cause downward pressure on the market. But just this goes to show you, if you can structure this deal, let's say we go down 20%. It takes us a year and a half. But interest rates are 8-9%. Well, you got 4.99. You got $2,400 payment. As long as you're comfortable with that payment, this is one of the examples that we try to do when we structure a deal. In essence, to jump into DeLorean, hit at 88, go back in time, and grab an interest rate from 2-3 years ago is kind of the goal. And if they're paying for it, great, because you're not, because you're just coughing up your $12,000. So overview. Inventory went down 3%, but demand decreased 3%. So it kind of offsets each other. Pending sales shows future sales for next month. Down 7%. It's not going to look good, but of course we're still unaffordable. The home value growth year over year is getting further from the stable line of 0. The PC data came out saying that the Feds are not going to cut rates now, but they're looking more promising they will, but it's not going to happen until it gets to 2%. Still elevated from there. And insurance are going to break records. We are the most expensive insurance state in Florida. Florida is, and now we're just going to go up another 14% because why not? The data comes from all these areas here, and your feedback. I'm going to put a link in the description of this email. Someone actually gave me my first zip code metro thing. It was about a 13-minute video. If you want to look at it, it's unlisted. I don't list every single video for public. It is an unlisted thing, but if you click the link, you can see it. And it's about a zip code in Bradenton. I always get Brandon and Bradenton mixed up. I believe it's Brandon. It's up in Parrish, Florida, and he was thinking, a buyer was thinking of buying a home and wanted me to kind of pull the data, and you can see kind of how I do that. You guys can give me a zip code in Pennsylvania or in Wisconsin. If you're thinking of moving down here and thinking of selling up in those zip codes, drop me a line. hit me a comment, say a zip code, and I'll make you an unlisted video just for your consumption. I might share it to the public later on to say, here's how they look, but you can take a look at that. Yeah, I talked to the person. He did not mind me doing that. And of course, if you have any questions or comments, please like, subscribe. If you want to see more and more content like this, I'm going to be doing some other things as well weekly, maybe making some shorts about, I'm going to be filming myself probably tomorrow, blowtorching my weeds off my brick paver driveway. Why would I do that? And what benefit does that do? You'll have to find out. So you can always go to LeeCountyMarketUpdate.com. Buyers out there, I know it says teachers can buy homes. It's my prettiest site for buyers, but the incentives that you get that I give to teachers, I also give to people watching my videos as well, except for the donation to your school, because I don't know where you are. And of course, you want to give me a call. That is my cell phone number. Talk to you later. Bye.